Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. All right, let's quickly move ahead. The National Bureau of Statistics data for the month of August 2024 shows that Nigeria's inflation rate is to 32.15%, and this signifies a monthly decline in inflation of 1.25% from the 33.4% reported in July 2024, and the second consecutive month of slowdown following the previous month's softening. Let's dig deeper into this data and the behavior of inflation in Nigeria with our first guest, Tajudeen Ibrahim, who is the Director of Research and Strategy, Chapel Hill Denham. Hello, Tajudeen, are you on now?
Hello, I'm on. Good morning.
Is Tajudeen on?
Yes, I'm on. Can you hear me?
Okay, I can't hear you. I guess let's take a break. I can see you, but I can't hear you. Hello.
Is it better?
Okay,
Can you
yes,
hear me?
yes, I can hear you now. I can hear you now, Tajudeen. Good morning and welcome to the program.
Good morning. Thank you for having me on the show today.
Yes. Now, let's get started. Inflation, that's headline inflation as well as food inflation eased in the month of August, of course, showing short-term signs of a slowdown. What do you think are the causative factors of this easing that we're seeing?
So the major driver of the disinflation that we have been seeing in the past 2 months is the prices of foods. Basically, food prices are moderating in terms of the rate of increase, and some food items have actually moderated in real terms, not just in the rate of increases in their prices. So, largely speaking, the disinflation that we have seen for 2 consecutive months is driven by food inflation, that is declining because we still have, core inflation still, on the rise, which means that, the major element, driving lower inflation is food inflation.
Okay, Nigeria's inflation behavior now for the past few months, if you take a look at it, at least we've seen a slowdown or easing in the past 2 months or three, if I'm not mistaken. But we also need to tell people, and I like that you talked about disinflation, which I mentioned earlier. We need to tell people it's not to hurry yet. That does not mean that inflation is really, it's still rising, that is high, but the rate of increase is at a slower pace. So if you take a look at inflation behavior in the last few months. If inflation keeps behaving like this, at what rate do you think that there will be a drastic drop? Tajudeen, I hope you understand what I'm saying.
Yes, I get you. I think one thing that we have to bear in mind is that we did not get to this level overnight. We got to this level over close to a 20 to 24-month period. So, which means that when we will see moderation in inflation, it will also not be a sharp drop in inflation rate. It rather, will be, a gradual decline in inflation. We have, started to see disinflation, and we have seen it for 2 consecutive months. Inflation was down in the month of July. It was also down in the month of August. And not just the year-on-year inflation, but also the monthly inflation was also down. So, which means that we are seeing a gradual deceleration in inflation rate, which I have already linked to much lower food inflation. In terms of when can we see inflation at a materially low number of like 20%, 15%, I think,
Tajudeen, even 20 and 15% is not even materially low. But I understand where you're coming from, that if we have an inflation of about 34%, 15% seems
yes,
like a
exactly.
lower stuff. But it's still double digits, which is not also good.
Exactly, but the reality actually is that we should look at it on a relative basis. If we currently are at around 32% and we now get down to 20% and then later to 15%, I think it is a great deceleration, and the authority can just work around ensuring that it comes much lower below that level. Speaking about single digit inflation, it is very possible.
We've
It
done
is
it before
something
in the
that,
past.
yeah,
Yeah.
exactly. So it is something that we have achieved before. But all those elements that were in place then are, largely speaking, not in place as we speak. To start with, insecurity was not a major challenge at that time. Number two, food security was not so much of a concern or worry for the country, because farmers were able to push out a lot more in terms of output, and we had financial support for the farmers at that time in terms of flow of credits to the agriculture sector. All those elements, largely speaking, are not present as we speak. So there is need to bring back all those drivers that enabled us to be able to have single digit inflation. And I reckon that on a single digit basis, Nigeria should walk around recording not more than like 9% inflation rate per annum, considering that we are an emerging market. If we were in an advanced economy, we would be talking about an inflation rate that is
Of
not more
2%.
than not more than 1 to 2%. So as an emerging market, it is natural for us to begin to think around, something that is not more than 9%. It will allow businesses to plan. It will allow for predictability. It will also, allow for, a good budgeting by both the government, and also by corporate organizations. Even individuals will be able to plan a lot more effectively when you understand that inflation, will not go beyond, single digit. And that speaks to a lot of investment. In my view, the government will have to invest heavily in infrastructure, in addition to ensuring an improvement in security, which I believe is a major element around ensuring a stable, movement in food prices, and an improvement also in local food, outputs. All these elements, to my mind, are what we can expect if the government is really deliberate around, a single digit inflation.
For me, I'm really caught. I don't even know what to say, because sometimes Nigeria's problems are just too many, and if you're just thinking of it, you don't even know where to begin from. If inflation, I don't think we should even be celebrating a deceleration of inflation figures at 32%, because if you even take the month-on-month decrease, for example, from my own mathematics, if you say, okay, let's even be reducing the way we are reducing month on month, it will take us like another 1 year or 1 year and a half to even get to the 15% that you're talking about. Before that 1 year and a half, people go don't die finish. Businesses go don't crumble. You understand? I was reading, was it over the weekend, or was it when I was even in Geneva, that a lot of companies are closing down. Companies that are not also closing down, businesses are raising their product prices by over 70% to be able to preserve their margins. And what that means is that a lot of people, their purchasing power have been eroded. Inflation has, people are really going for essentials now. And the essentials are really like food, transport, school fees for their children, rent, which I will come to later in the core inflation also, it's also driving that part, even though we're seeing a deceleration. So where does it really leave all of this, in terms of inflation outlook? If we say the way we are going now, we are going slow, 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 even lesser than a snail, as, as it were,
Okay,
where would we be
okay.
in the next 1 year and a half?
So I think in the next 1.5 years, it is possible for us to be around 20% level.
Which is
Because
not
if we take
good.
a look at, yeah, it is not good, but
Yeah.
I reckon that this is a conservative view. And a much bullish view will be for me to expect inflation of around 15 to
15%.
18%, or on a bullish note. So on a conservative note, I think we could be around 20% level. And if we take a look at two African countries, which we track Ghana, we track Egypt. Let me start from Ghana. Ghana at some point about 2 years ago,
50
had an
something
inflation
percent.
rate of about 50 something
Yes.
percent. But as we speak, the inflation rate is about 20 something percent, below 30%. At some point, Egypt, sometime last year, was around 33, 30, 34% inflation rate. As we speak, Egypt is around 20 something level, 25, 26 or thereabouts. So, which means that we are not the only country suffering from high inflation in Africa. But although the causes or the drivers might be different, the
Okay.
reality is that we are also seeing our own part of the pressure. And I reckon that the outlook is conservatively positive.
Now, you just brought me to a place I also wanted to take this interview to, which is listening to the Minister of Agriculture, Senator Kyari. I don't know if you also saw the news that 50 kg bag of rice will now be sold to non-civil servants at 40,000 naira, where we're seeing price of 50 kg rice over like 90,000 naira now. When I was reading what the Minister of Agriculture said, he said that, of course, COVID-19 pandemic, perhaps the remnants are still there, Russia-Ukraine war, as well as our local economic challenges are impacting why we're seeing a food crisis in Nigeria. Do you agree with the Minister of Agriculture on that? Because we've seen that food inflation has really impacted headline inflation. You know, the price of bread, yam, grains, other commodities, palm oil and co have been on the increase, which is also pushing headline inflation. So do you agree with the Minister of Agriculture that COVID-19 pandemic, the remnants are still here, and that is why we're suffering a food crisis and our local economic challenges?
So I have my personal view, and my personal view around food inflation is that we have not been able to produce as much as we should to feed ourselves as a nation, and the fact that our agriculture is still largely speaking not on a commercial scale in terms of the size that we should have. It is just individuals that are doing farming, or families that are doing farming in food producing states that are largely speaking involved in agriculture. Then those few farmers are also being attacked by gunmen. That to my mind speaks to insecurity, and that is largely speaking because of the inflation we are seeing. Some authorities may link it to the remnant impact of COVID-19, but I reckon that insecurity is more of the major driver. And if you add that to periodic floods that we have in food producing states or regions, you will agree with me that those are some of the issues that should be addressed. In terms of policy response, I noticed that the government, has deployed about 10,000 plus agro rangers to food producing states to ensure an improvement in security. I think we should watch out to see how that plays out, because security has to improve. Otherwise, we will have to fill the demand supply gap in terms of food with importing from other countries. And when we do that, we automatically import inflation from those neighboring countries. So to my mind, it is more of lower output because of insecurity, because of flood events, and not so much of COVID-19. If we really want to track what food players are giving us in terms of market updates. As we speak, for instance, we have rice prices rising in the market. And those that will benefit from the government, lower price of rice are very few. So, which means the large portion of the population will still be feeling the impact of elevated, prices of
Yeah,
rice.
yeah.
The same thing applies to beans. And the only thing that seems to be coming down as we speak are tomatoes and
Tomatoes.
pepper prices, which I reckon is because of higher harvest, higher output, which is really what we need.
And rice it's a food or it's a commodity that we can actually also be self-sufficient in. At the time we were told of rice pyramids across the country and all of that. Where are those even rice pyramids? And even though the minister said that 30,000 metric tons of rice or so will be released. But let's go into another version, which is core inflation, and that is where rent is, because looking at the data, core inflation came out at 27.58%. Of course, core inflation excludes food and energy. The highest increases were recorded in rent as well as transport by bus and co. How dangerous is this really? Because I mentioned earlier, Nigerians spend three quarters, at least the last living standard survey that we're going in 2022 showed us that Nigerians spend three quarters of their income on food. Now, I don't know, another one has not been done. I guess if another one has been done, it could even be worse than that because inflation wasn't at 30-something% when they did it. So we would say, okay, food and rent right now are essential services. How dangerous is this core inflation, even at 27%? Because a lot of Nigerians are complaining that their landlords and landladies have increased rents.
So I think rent is not even the only thing that has increased. Children are just back to school. This new session, and on average, it looks like we have seen well over 70% increase in school fees. Across at least some states. Sorry, some schools in Lagos. So when you talk about rent, it is just the landlord considering what will their income be, and how much can their income finance their needs if they should maintain the same rates. And that, likely speaking, in my view, is an indication of the reason that they increase, their rent, because the value of the rents they were collecting last year in dollar terms is not the same as the value of the rent they are collecting this year. Bear in mind also that when they collect the same or lower value, they cannot purchase what they were purchasing before with the same old rent. I have just spoken about school fees
Tajudeen,
going
sorry,
up.
let me come in here because we have just a few minutes. I understand where you're going to, but the people that they also want to collect rents from, their salaries have not increased as it were. Forget the minimum wage stuff. The minimum wage, even now we're hearing that the minimum wage has still not been paid. But if you take a look at even the index, if you gauge it the way, the percentage points by which the minimum wage has increased and what rents is costing now, is not even the same. I hope you
So
understand what I mean. So you
I
see
get
people
you,
moving
but
to other places that perhaps they can afford, or even you see
I
people
get
even moving to rural areas now.
I get you, but it is a matter of demand and supply. Yeah, because if you want to live in the cities, you want to live in areas where you have high population, where you have businesses, where the area is very busy. I think you will just have to be ready to pay the rent. Otherwise, there are very interesting considerations around moving to less populated areas, where rent is much cheaper. And I think, that will largely speaking be dependent on where do you work. So if you work far away from where you live, you will still feel the impact of inflation via transportation costs. So all these elements, they just speak to what the government has to address in terms of ensuring that we have an improvement in our infrastructure so that the cost of doing business is much lower. The cost of transportation cannot go lower if we have PMS prices at current level,
Okay.
and also with it going higher in the near term.
Okay, two more questions before we go. Now, and let me link it to what we've just said. If we take a look at states that are very expensive to stay in, according to the NBS, and if we have that card, we can put it back on air. Bauchi State, Kebbi, Abia, Oyo, Lagos. Lagos is actually number 8 on the list. You're seeing a lot of northern states as being the most costly states to be in. I don't know if you saw that. What does that data actually tell you? Because these are states that are also supposed to be within food belts, as it were, and they are the most expensive, costly states to live in. Bauchi, Kebbi, Jigawa, Sokoto, Yobe, Niger, Gombe. You're only seeing Oyo and Lagos as the southwest states there. Then Abia as the south is the top 10. Of course, perhaps in the coming days we'll do the 36 or 37 states for you. But what does it really say? And that also links me to what we're talking about. Because of high inflation now, do you think that people will begin to move closer to the rural areas? And then let's also link it that rural inflation is at 29.95%, which is also still high, but compared to urban inflation at 34.58%. Then the second question is, what's your outlook for MPC meeting next week? Is Cardoso and his team that perhaps the appointments last year, I think just about a year old now, do you think they will hike or they would hold? I don't know if I'll talk to you next week, but just give me an indication of what you think.
Okay, so let me start with the states with high inflation number. I think what is happening in those states is an indication of a slower growth rate of output, and when your output is reducing and you are also taking what is produced in that state to the urban areas, whatever is left would have to go will have to be purchased by Nigerians at much higher prices. So food produced in those regions, for instance, find their ways into Lagos and some other urban cities in the country. So with that, whatever is left, would have to be purchased at much competitive price. I think that is number one. Number two, to my mind, is around the fact that a lot of people have been displaced because of insecurity in some of the northern states. So you have, very fewer hands, working for the entire, country, if I can say that. So there's no way the output, will not, be slow or reduce even. So with that, you are likely to see much higher, prices, and demand is not falling. Demand is rising because population in that region is fast rising. So, and the supply is slowing down. That's, to my mind, explains it. Number two, around, what the Monetary Policy Authority most likely will be doing next week, I reckon that, they will hold all the monetary policy parameters constant next week when they meet. And the reason for that is that, number one, three of the committee members were already voting in favor of a hold of monetary policy rate. Number two, and the more compelling reason, is that we have seen 2 consecutive months of disinflation, which to my mind, suggests that we should take a break
Okay.
on hiking interest.
Okay, it's just that we don't have time. I wanted to probe further that the Cardoso that I've seen in the last 1 year and I've heard speak, I don't know if 2 consecutive month-on-month deceleration, which may not be interest rates or rates impacted because of harvest. I don't know if he would hold rates, but I hope, let's say I'll talk to you next week, then we can we can delve into that further. Thank you very much, Tajudeen, for joining us this morning. I wish you a great week.
You too.
All
Thank
right,
you for having me. Bye for now.
bye. Let's get into another conversation very quickly. Of course, another version of the breakdown of the estimated price of petrol purchased from the Dangote refinery has been released by the NNPC Limited. Of course, it was released on Sunday, and the NNPC Limited gave a chart breakdown of the refined petrol products it bought from the refinery, with the oil firm announcing that it will pay Dangote refinery in US dollars for the September petroleum offtake, and the first day of October 2024 oil offtake will mark the start of Naira transactions. To discuss this after the break is my guest. He will be joining me after the break, MS Ngawa, an energy economist, and we'll try as much as possible to see if we can understand the petrol price war, the conundrum in this sector. For the past 28 years, we've been importing PMS petrol into the country. With Dangote refinery now on stream, will petrol prices come cheap? But as Nigerians are seeing it now, perhaps there's still more confusion. We'll try and understand that when we come back from this break. Do join us again. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to the YouTube channel, drop your comments as well as like, and most of all, share our content.